Welcome to part two of our three-part series on how to trade and mark up your charts. Part two, we are going to be going over market structure, trends, and high probability setups. One of the more important ones that we're going to be going over is break of structure. So let's dive right into it here. We have our GBP AUD trade right here, and we are on the 1 hour time frame. As we talked about in our last video, we mark our support and our resistance zones on the 1 hour and on the 4 hour. Right now we have it marked on the 1 hour. What we can identify here is a trend. Now, how do we identify a trend? There's a couple ways. I like to use trend lines. Trend lines help a lot when you are looking to kind of figure out where it starts. Is it reversing? How long has the trend been going for? Things like that that'll really help you understand the way the market is moving. So right here, we have a clear uptrend. How do you tell if it's an uptrend? So what we have here is higher highs and higher lows. So that's a high, and that's a high right there. All those highs are higher than each other. Now, on the bottom side, we have higher lows. You have a low here, a low here, a low here, and a low here, as well as up here. So our highs are higher than each other, and our lows are lower than each other. So with that said, we have just established a trend. In this case, it's an uptrend. Now, once we've established our trend, now we can try and discover and identify where we enter the trade. This is one of my favorite types of trades and the one that I make the most money on, and it's the most simple. So we have a break of structure right here. And what I mean by that is the trend is changing. Right here, you no longer have a higher high or a higher low. We have a break of structure. And the way that we can identify that is the lows have now broken the previous lows. So if we pull up our tool here, we can notice that our past low was right here on the trend line. Now we broke straight through that low, and this is our new low. Now that we've established that the trend is broken and there is a very clear break of structure right here, we can look to enter a trade. Now, on the 1 hour time frame, you may have to wait a little bit. So what we can do is dive deeper and look on the 15-minute time frame. Now, we would only want to do this after we've already established that we have a break of structure. We've done that here on the 1 hour by identifying that we are no longer in an uptrend. It has stopped and we are now moving toward the downside. So let's hop over to our 15-minute time frame. On the 15-minute time frame, there's a couple things you'll notice. At the break of structure line, you're going to see a little bit of consolidation right here. This is where we have to wait. We need to see it break the previous low, which is right here. So in order for this break of structure to be valid, we would need to see it break this previous low, which is right here. Well, we see that happen right here. So let's zoom in a little bit here so we can kind of understand what we're looking at. The previous low that we just mentioned was right here. We broke it right here. We now can create what we are going to call a micro resistance. If you were to draw this on your chart, what you're going to want to do is put it where it was being used as a support and it is now being used as a new resistance, which is right here. Now that we've established that we have A, break of structure, B, we are no longer on an uptrend, and C, we are on a downtrend, now we can look to enter a trade. Now, you may be asking, where am I going to enter the trade? Well, like we talked about in part one of this series, is a break and retest. And that's quite exactly what we had here. After we surpassed this previous low right here, we broke through what is our new resistance and our old support. We came right back up and tested it and went down from there. Now, on a 15-minute time frame, this can be somewhat of a quick trade. If we are to look at our measuring tool here, and if we entered off that bearish candle and held it for approximately a day or two, actually even less, you're looking at 132 pips. So what we did here was identify our break of structure in two different places. We identified it on the 1 hour time frame right here. We identified it on our 1 hour time frame in between our support and our resistance zones. We identified that there is an uptrend, again, by showing that there are higher highs and higher lows. That trend was then broken at our break of structure right here when we ended up having a break of the previous lows, where we now have lower highs and lower lows. This signifies a downtrend. So in order to get into a high probability trade, you need to be able to identify three key things. And those key things are we in an uptrend or a downtrend? Is there some sort of break of structure that is indicative of us taking a sell or a buy because the structure of the market is broken? And then where do we get in? Now, getting into where we get in. Now that we've established this break of structure, we're going to wait for it to retest our new resistance zone. And that's exactly what we got right here. There's two ways that you could enter this. Once we see that this long green wick is rejecting our zone right here, we could go ahead and take a sell. Or we could wait for the full bearish candle close that we got right here at this 10 a.m. candle. So either one is valid, but the more safe route is to wait until you have this full engulfing bearish red candle, and from there you can enter. Now you may hold some drawdown if you do that. For instance, if you were to enter right here and you don't get out right at the bottom right here for 50 pips, you're going to see some retracement back up this way. However, it does not break the previous highs. If you notice, this high is still higher than this high, meaning this low is also still lower than this low. We are in a downtrend still. So now that we've identified all that information, sells are a possibility here. Now you have to look at when to get out. Now, I am not a big proponent of risk to reward ratio trading. I don't believe in the R&R method, and there's a couple reasons why. But the main one here is that once we've identified our break of structure, we can now get in a trade in addition to drawing smaller zones again. We have another zone right here. We broke and retested this zone and now are looking to see where is the next zone. Well, our next support is right down here. So any entry, realistically, any entry in this area at the break of structure point is a good entry. Now we have to talk about risk management, because if you were to get in the trade at the top right here, let's just say you got in on this candle before this confirmation, you're going to have to understand that there is going to be ebbs and flows of the market. And you don't want to scare yourself out of a trade by getting out too early just because you see a little bit of retracement. So in order to avoid that, we wait for three confirmations. And in this case, we had the break of structure, the creation of a new resistance, which broke an old support, which was right here. and we had the flip of the market from an uptrend to a downtrend. Now, if you have any questions or this is something that you don't quite understand, there is a Discord group that I offer that is free. And when I say free, I mean free. I don't charge. The only thing that I charge for is paid signals, but we also have free signals. I hope that this video helps you understand how to get into trades better, how to mark up your charts properly, and understanding that break of structure is one of the most powerful tools that you have in your trading arsenal to make profits and turn your account from being negative to positive. Make sure if you like this video, you subscribe, and I hope everybody has a great day. Thanks for watching.